So this is my explanation of why not to buy the dip. But you can, but it depends when. Because let's say this is simply the value of the stock and that's the price over time. And let's say whatever stock price goes up and down, it goes up, goes down, goes up, goes down, goes up. Now in theory, you want to buy at the dip. Let's say the maximum that you could get is you buy here and you sell here. You buy here and you sell here. You sell here, you buy here. The problem is, while this doesn't happen yet, let's say it started dipping, the stock price started dipping and people start saying, hey, buy it, buy it. And you suddenly bought at this point. Let's say you bought here at that point, and then it's continued to dip and you lose more money, you lose more money, you lose more money. Sometimes out of fear, you start selling it. And then you even lost money. Now let's say you didn't sell it. You didn't sell it and you hang tough, and here when you reach this point, it's almost like break even. You broke even because you just got what you won back what you lost, and then when you go here, you start earning again. So that's why when things start going down, I typically don't buy right away, because you start losing money. Even if the long run it turns into something positive, the distance between here, you're not really sure how long that is. It could be 1 week or it could be 6 months. And if it's 6 months, that's like 6 months of pain or 6 months of struggle. So what do I prefer instead of buying the dip? Instead of buying the dip is you pay attention to it. Once the dip happens and you currently own it, you sell. You sell after. Now, you'll make the most money if you sold here, but you don't know the dip is going to happen. Now that you have confirmation that it's already going down, then you sell at that point. Now, as it continues to go down, you don't buy, you don't buy. You don't buy, because if you buy, you're just going to lose more money. Once it starts climbing, then you buy over here, you buy here. Now, that's going to be a bit late. You're going to say, hey, I didn't maximize my gain. If I bought here, I could have made more money. If you bought here, you could have made more money. However, you don't know it's going to go down or continue to go. You don't know if it's going to continue to go down or go up. When this point happens, you have confirmation that it's going to go up. Then you know you're going to make money. Now, ideally, you sell before it takes a dip, but again, you don't know that's going to happen. So it's going to have, you're going to sell somewhat after, and these areas here are smaller areas of losing money because you're reacting to how the stock moves. But you can't predict the future. You could react to what happens. So do I buy at the dip? No, I don't buy at the dip. I buy when it starts going up. And then I sell when it starts going down. And you take these small losses, but at least you're in the positive. Instead of buying at the dip and then it continues to go down. And some people will say, then I'll buy more. Okay, it continues to go down, then I'll buy more. If you have that amount of funds to throw away as you continue to go down and then go back up, but not all of us will have unlimited number of funds to continue buying as it dips before you make bank when it goes back up. So that's my thoughts on the matter. So an added clarification point. Yes, I did lose money here. Yes, I did lose money here. But if I sold here, then I made this amount of money. If I bought here, even though I didn't maximize the earnings, I bought here. And even if I didn't maximize the earnings by selling at this point because I didn't know, and I sold a little bit later, then I made this much money. I made that much money. with a little bit of loss, but overall I made more instead of losing more. As everyone announces, buy at the dip, buy at the dip, buy at the dip, you're just going to lose more money. I would buy on the turnaround point. Now, I am no genius that I figured this out on my own. I learned this also from my mentors. I learned from others. And this specific technique of buying at the bottom, it's basically finding the bottom. And once you know that the bottom was achieved and it was confirmed by the rise above, that is when I buy. And that specific technique, as my mentors were teaching it, they call it bottom fishing. So you're fishing for the bottom, determining when the bottom happens before you make the buy. And my mentors are actually instructors from a program I'm a member of, and they basically find the bottom fishing stocks using software as well. So yeah, just wanted to mention that when I mentioned the losses, it doesn't mean I lost. Overall, I win with small losses instead of losing big and waiting for that win to happen.